Where does all of that money go after you join the 3 Comma Club? Most billionaires don't have their whole fortunes stashed away in a savings account. A common practice for a middle-income earner is to keep his or her money in the bank. That way, their money is protected and they can receive interest on their savings. What do millionaires do with their cash? Stocks, mutual funds, retirement account, and real estate are some of the physical and financial assets that wealthy individuals invest in. Billionaires do not retain all of their assets in one location. They own stocks, bonds, businesses, real estate, and other assets in their portfolios. Billionaires, of course, deposit their money in the bank. A bank can protect their income and make it accessible to them when they need it. Furthermore, because they control a large sum of money, you would anticipate the interest on the money in their bank accounts to be higher than for individuals with a small quantity of money in their accounts. Private banks also feature zero balance accounts for millionaires. They keep their money in cash and cash equivalents and use their zero balance accounts to write checks. The private bank, as caretaker of their numerous accounts, sells off enough available funds to settle up for the day at the end of the trading day. Federal insurance isn't a concern for millionaires. Their funds are held in their names rather than the custodian, private banks. Other wealthy people have safety deposit boxes stuffed with cash in a variety of currencies. These safe deposit boxes may be found all over the world, and each currency is kept in a country where it is used for transactions. They don't have a $1 billion savings account in their possession. This is because the wealthy are the ones who suffer the most from inflation. To avoid their wealth depreciating year after year owing to inflation, they must put it to work by investing it, earning more than inflation consumes. The filthy affluent, on the other hand, not only invest in broad asset classes, but also distribute their wealth among many financial services companies and financial experts. That way, clients won't lose everything if one brokerage goes out of business or if a financial advisor attempts to take their money. Trusts are a popular estate planning strategy among the wealthy. Trusts are legal entities such as a business, a non-profit, or a real person into which the wealthy can invest money that is not part of their estate. Wills can be challenged in a probate court after your death, but trusts are considerably more difficult to challenge in court. You can utilize trusts to pay less taxes and hide your assets in addition to keeping property out of your inheritance. Want to offer one of your children more money than the other without anyone realizing? That is not possible with a will, but it is possible with trusts. A millionaire might set up trusts for each of his or her family members, including those who are yet to be born, such as grandkids and great-grandchildren. They might set up trusts to donate to all of their favorite causes. They may have one trust for their home and another for their company. It's easy to become bogged down in the details. What does it mean to be super wealthy? They must, however, keep meticulous records in order to appropriately pay their taxes. The income they get from any trusts is subject to income tax. Dividends and capital gains are both subject to taxation. When you die, there's an estate tax. And everything you give away before then is subject to a gift tax. The federal government allows you to give anyone up to $14,000 tax-free every year. Above that, you'll earn a $1 million lifetime tax credit for donations. However, once you begin giving people or trusts presents in excess of that, you must begin paying gift tax. So keep meticulous records to ensure that you pay your taxes accurately. Net worth is usually not difficult to calculate. Stocks and bonds are valued in liquid markets. A mansion, a sports vehicle, or a yacht can all be appraised to establish their worth. If you own a privately owned company, it might be tough to determine its worth. There are lawyers whose sole goal is to undervalue private businesses for tax purposes. Investing in art is a difficult task that demands expertise, confidence, and patience. Returns aren't always assured, and even when they are, they can take a decade or more to materialize. Nonetheless, some billionaires use this medium as a store of value on a regular basis. They purchase artwork from up-and-coming artists who will be in high demand as their careers progress. However, most art investors are unsuccessful in forecasting which artist would become famous. As a result, billionaire art investors frequently purchase pieces of art that have already shown their worth. Picasso and Van Gogh, for example, will always command high prices. Thus, some of these wealthy individuals purchase masterpieces as a strategy to maintain their wealth and store value. Some millionaires value simplicity beyond all else. They put their money into index funds and equities that pay dividends. They enjoy the passive income generated by stock assets, just as they enjoy the passive rental income generated by real estate. They simply do not want to devote their time to investment management. Ultra-wealthy investors may own a majority stake in one or more significant corporations. Many millionaires, on the other hand, have a portfolio of just a few stock assets. Many people invest in index funds because they offer good returns and don't require much work to manage. They also feature cheap management costs and a wide range of investments. Dividend-paying stocks are also popular among millionaires due to the passive income they give. It all depends on how these millionaires decide to spend their money. You'd expect them to have access to their money if it is all in cash. If the money is in the shape of an investment, however, they will have to sell before they may access it. Rather than squandering their money on frills, prudent billionaires look for ways to increase their riches. They achieve this by investing a significant portion of their assets in order to generate large profits.